Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, it's good news for all those expecting appraisals this year. A 10% plus salary hike could be on the cards in India Inc. in 2023. Remember, as the appraisal cycle has kick-started, India Inc. is poised to hand out double-digit salary hikes on an average in 2023, according to some HR consultancy and advisory firms. And to talk more about the trends that we are witnessing, Mr. Jang Bahadur Singh joins in. He's the Director of Human Capital Solutions at Aon India. Welcome, Mr. Singh, and thank you so much for taking the time out for this discussion. And it's always a pleasure understanding these insights from you, because most of the salaried class is always on the lookout to understand what kind of sentiments are really taking place across domestic and worldwide as well. And according to these latest forecasts by you and several of the other firms as well, what we are given to understand that is that the 10% plus hike could be on the cards. Now, this sounds good, and this could be perhaps 2 years in a row when we would see double-digit hikes as well. I wanted to understand from you that despite the global economic uncertainties, the talk about slowdown, what is really giving the confidence of giving out double-digit hikes to India Inc. and majority of the companies here?
Sure. No. Firstly, thanks for having me on the show. Thanks for having me on the show, Sakshi. So it's a real pleasure for me. You're right. I think when we look at the current scenario, there's a lot of volatility that we see across the globe, and it's only then natural to have concerns when you read that firms are projecting a double-digit increase, and that too for the second year in a row. I think the way to think about it is in two ways. One is that there's an absolute number of 10%. And then the reality is that this 10% is made up of industry groups that are fairly heterogeneous. So when we look at the India story, the India 10% number, on one side, you have the entire technology space, which is very much dependent and connected to the happenings across the globe, especially in US and UK markets. And then you also have the local industries driven predominantly by local demand in spaces such as FMCG, manufacturing, and so on and so forth.
Yeah.
So what we are seeing is that when we look at the technology sector, especially in technology product organizations, there is a direct impact of the slowdown in US and other developed economies, and which is where, as compared to last year, while the number 10% does seem high, it is definitely 15 to 20% lower than the number that we had projected for these same industries in 2022 and also in 2021.
Okay.
Having said that, if we then look at the local industries, local sectors such as FMCG, if you look at manufacturing, that is where we actually see a higher increase as compared to last year, and which is where the balancing act of putting both of these pieces together is where we end up at a 10%.
Okay, so while technology you expect may continue to hike, but there could be some moderation vis-a-vis last year. But in sectors like FMCG and manufacturing, there could be a year-on-year increase, is what you're saying. But overall, which are the sectors that will lead the pack when we talk about 10% plus salary hike? Which are the sectors that are likely to give out the maximum hikes this year?
Yeah. So if you look at it from an overall standpoint, technology continues to lead the pack. I mean, the fact is that while from a business standpoint, technology may be slowing down, but the demand for tech talent isn't slowing down. Today, if you look at technology talent, there's demand that is cutting across secularly. So, for example, FMCG firms are going after this talent. Financial services firms are going after this talent. Even energy, health and public services, all of these sectors, which are non-native to technology talent, are going after the same talent. And India historically has been a very demand-supply economy, labor economy, especially when it comes to technology. Even in the past, we have seen that there isn't a strong correlation to inflation or from a business result standpoint. There's always been this factor of demand-supply that has kicked in, and which is where, because there's demand outside from traditional sectors as well for this kind of a talent, which is ensuring that the 10% number isn't really coming down to pre-pandemic 8 or 9% that we would have seen in the past.
And where would you see lower end of the hikes coming in? Which are the sectors would be the lowest in that pack?
Yeah, so metals and mining, telecom, these are sectors that are still that are likely to see the lowest increase. increases in salaries. Also, sectors such as e-commerce and especially the B2C space. We've all seen what has happened, especially in the ed tech sector. Once the economy started opening up and people started again going back to office or school, or students and other folks started looking at traditional modes of education. And I think these are spaces which are really hit. I think the one headline for us is that in 2022 and in 2021, the early stage of the startup sector was really seeing a boom. There was almost
Yeah.
44 billion US dollars that was pumped into this space. Now with the funding winter that everyone's been talking about, I think this
Sure.
particular space has been hit really hard. There are a lot of startups that are now being very cautious in the way they invest. And
Yeah.
while 10% is a number that we always talk about from an org perspective, there would be pockets within an organization, especially non-critical or periods, which would actually see little to no investment.
Very important takeaway right there. We've been also looking at the kind of layoffs that we are being seeing getting announced, especially in the startup world, as a repercussion of what's also happening globally. Tech giants announcing, big set of layoffs this year, continuing from 2022, and the spillover effect being seen in the Indian startup community amid this funding crunch as well. Do you see there could be prolonged phase of cautious move as far as the hiring trends are concerned for the startup world, and again for the appraisals right there as well?
Yeah, I think it's a bit of a difficult place to really predict right now. I mean, every day there's almost a new black swan event, right? Just when you think
Yeah.
that things are going to improve in the next couple of quarters, something else comes up, whether be political tensions, whether it the banking collapse, tier two banking collapse in US. So it's a little bit of a hard predict right now, but from whatever we are hearing and the clients that we're talking to, at least for the next couple of quarters, funding would be difficult to secure, or especially at the valuations that they previously commanded.
Yes.
Now, VCs which are committed to certain businesses, they continue to invest and they will have to invest, and especially for business models that are proven. But I think from a startup standpoint, what you're seeing is a lot more of cutting down of investments, or moonshots that a lot of them would have invested in the past. Specifically from an employee standpoint, I think uh, most startups are very clear in terms of what is this talent segment that is core to the business. So be it talent especially to do with technical skills, or be it talent especially to do with product and business related skills, I think they will still continue to invest there.
Yeah.
But for non-core roles, operations, or customer support and experience, and even for that matter, HR, I think that is where we are seeing lower salary increases, lower investment, a little bit of automation also kicking in, and that's where, while the pool is limited, the distribution would see a lot of differentiation, both in terms of the kind of jobs, wherein certain parts of the organization seeing much higher salary increases, and also from a performance standpoint. So, unlike in the past, where most organizations adopted a socialist method of distributing as much as possible to almost everyone, now they're becoming very clear in terms of who are their key talent group, and let's disproportionately invest in that particular pool, rather than following a socialist approach.
Right. Let's stick with the tech space, and I will also ask you about AI, which I have in mind, in further into the conversation as well. Tech companies, you say that will be leading the pack despite the kind of moderation that we may see on a year-on-year basis. But we've also seen the recent Q4 earnings, which have really disappointed, especially for the bellwether, TCS and Infosys as well. The stock markets have given a big thumbs down with the kind of projections they have, the guidance they have, and the kind of revenues they've pointed out. And amid that, you also pointed out the banking crisis has been the latest one that it has emerged as the latest worry for the tech companies as well. On the backdrop of all of this, could things change for these big IT companies as far as giving these 10% plus hikes are concerned? Could anything change for the worse because of these macroeconomic uncertainties?
Yeah. So I think, firstly, I think on TCS and Infosys results, without making company-specific comments,
Yeah. Yeah.
uh, you know, but what we heard as both of these press conferences ended was that as banking crisis, there's some sort of a handle being taken. into it, March was, as a month, slightly better off than the first 2 months of the year.
Sure.
And I think having said that, these are also quarter-on-quarter numbers.
Yeah.
2022 was phenomenal, so 2021 year-end was phenomenal. So quarter-on-quarter, there was certain moderation that was expected. But having said that, I think the way this works is that we've been talking about recession for a long time. I mean, almost
Hmm.
everyone has been predicting a recession every quarter, which has
Hmm.
meant is that rewards professionals and CNB teams, they've been pretty shrewd about it.
Yeah.
The 10% number that we typically talk about is wage inflation at an overall company level, but they typically do hold back almost a couple of percentage in their back pocket, just to make sure that if there's a sudden upswing or downturn, they know how to manage it.
Hmm.
So, which means that while we say 10%, not everyone, like I said, not everyone's going to see the same numbers,
Sure.
and depending on how their cycles align, some of them have their increment cycles later in the year, some of them are already done, some of them are going to have it very very soon. So, depending on the information available at that point in time, they can definitely look at levers. I think within compensation, there's an entire bonus pool or a leverage cost leverage models that they operate with. So maybe that's where they cut down to save costs, or for that matter, if the things go very very south, you might see actual shaving of the budgets. But like I said, given the volatility, it's difficult to definitively predict how things will pan out, say 2-3 quarters down the line.
Yeah, could variable be at stake? Because, we were hearing about such news flows that, perhaps the companies may hold some of the variable payout.
Yeah. So variable payouts in most companies is directly related to business performance.
Hmm.
Now, given the results in a couple of firms have not been very encouraging, there's always a multiplier directly linked to to the business performance in most companies. So it's highly likely that the variable payout gets affected by that. And before even companies start going to salaries, they'll look at T&E expenses, which means travel and other entertainment expenses will cut down. They'll also start looking at any non-discretionary, or rather all discretionary expenses. There'll be tighter controls built in, and then finally they'll see, okay, what is the overall budget that we're operating with. But I think definitely variable pay is something that we will see a definite cut in if the firm's performance as a group is not is if the firm as a group is not doing that well.
Okay. On the other fact, with the other big concerning point for these IT majors has been attrition levels. There are 20% plus, and although they are ebbing a little, but they are still very high and much higher than, the kind of 16% kind of attrition levels that we were seeing pre-pandemic as well. I wanted to understand from you, from your sense, has the attrition trouble you see starting to ebb a little? Is that still a big worry sign? And how could that really impact the hiring trends going forward too?
Yeah, no, so I think if you look at attrition, definitely from where we were in 2022, there is a definite decrease in attrition. Now, having said that, it's very unlikely that it'll go back to the pre-pandemic level. The demand for talent, like I said, the demand for tech talent hasn't really come down, even if tech as a business is not doing that well currently. So, given that demand supply economics, attrition itself will not come down. I think some of the attrition is always calculated as a rolling average for 12 months. So if I saw, when I looked at the report yesterday of one of the IT majors, they said that their attrition has come down by 4%, which is probably something that's encouraging, which means that the supply side pressure is definitely increasing. But
Yeah.
having said that, I think both voluntary, involuntary attrition in this day and age, it'll be very difficult to see that coming back to pre-pandemic levels. Our sense is it'll hover somewhere around 18 to 20%, and that's what their models also factor in, because that's how they get in newer ideas, newer people, pyramids get refreshed, and the overall pyramid retains its structure. So these models, especially in the IT services, bake in an 16 to 18% attrition in their model. And when in the past, when this inched above 20% is when they started seeing supply side pressure.
Sure.
But that 16 to 18% mark is they should be quite comfortable. Is my personal opinion on that one.
Sure. You briefly talked about AI, so I wanted to understand from you, where do you stand on this debate of whether AI will, take away jobs or hit at least the blue collar jobs, the lower skilled jobs very, very soon and very, very fast? And how would that really have an impact on the kind of salaries such big companies really dole out?
Yeah, yeah. So I think AI is already here. So if you look at any banking captive, or if you speak to BPOs and other third-party players, they've already automated a fair chunk of the bottom of the pyramid, very SOP-driven jobs. So AI is not something new. It's already being used by a lot of organizations, and that one round of rationalization of jobs has already happened. I think as processing power and our ability to use technology improves, I'm sure similar impact will be had in other sectors as well. What it means is that from an overall org perspective, it is likely to improve the productivity and also help you with your bottom line. And you have either more to invest from a talent standpoint, or you have more to invest in other growth areas. From a salary increase perspective, what it means is that at the end of the day, you are able to then focus on jobs which will help you grow exponentially or will help you disrupt existing models. You are able to afford talent that is probably of better quality. Having said that, I think this is the same story for every organization. I mean, AI is not something again that's very new. It's also a very open source, the kind of base technology behind all of this. Which means that if company A is using, company B will also be using, and then in a very, very competitive model, game theory kicks in, and
Yeah.
which is where the cost of talent as an absolute number may go up, but in the long run, I think competitive advantage for a company may be limited. But overall, from a sector standpoint, productivity will happen. We'll be driving better margins, and we'll then be focusing on roles which will help us, disrupt and innovate. And I think that's the cycle that I see repeating.
All right. Well, thank you so much, Mr. Singh, for being with us and sharing with us all these insights about what can we really expect as far as appraisals in 2023 is concerned from various sectors, the sectors that could lead the pack, and the kind of things or factors that could lead into some kind of caution trickling in as far as the outlook for some of these companies is also concerned, and how are the major economic changes really impacting the way India Inc. really thinks about how do they look at hiring trends, attrition trends, and the salary hikes going forward from here as well. Always a pleasure having you with us on Business Today TV. Many thanks for being with us.
Thank you for having me. Have a nice day.
All right, and with that, we will wrap up this special edition. Do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets.
If you like the video, do like, comment, share and subscribe.